For institutions, Bitcoin has jumped from being undesirable to undeniable. Just a few years ago, the biggest institutional investors dismissed Bitcoin as a scam and as a way to launder money. Jamie Dimon, CEO of JP Morgan, jumped on the hype train, bashing Bitcoin as being a Ponzi scheme. But the recent change in attitude towards Bitcoin by skeptics includes Dimon, who has changed his stance on Bitcoin with JP Morgan, claiming that Bitcoin could rise to as high as $130,000 and labeling it as digital gold. While Bitcoin is considered a hedge against inflation and economic instability, Tyler Winklevoss believes that the opportunity lies in being an early adopter. Welcome to Crypto Vision, your one-stop for all things crypto. Before we get into the video, please consider subscribing to the channel and hit the bell icon to get the latest updates. Leave your thoughts in the comments section below. With that being said, let's get into the video. Tesla and Elon Musk have dominated headlines due to the $1.5 million investment in Bitcoin. Jack Dorsey, CEO of Twitter and Square, has shifted his focus towards investing in the Bitcoin ecosystem and surrounding services. Square has cumulatively spent over $220 million in investment for Bitcoin. Before Tesla and Square ventured into Bitcoin, MicroStrategy, the largest independent publicly traded business intelligence company, purchased over 90,000 Bitcoin. UK asset management company Ruffer also announced that it had accumulated over $550 million worth of Bitcoin, allocating around 2.7% of its portfolio to Bitcoin. Institutional investors are rushing into the market as they finally see Bitcoin's potential as a store of value. While Bitcoin has been considered a safe haven asset like gold, investors have been jumping in because it has continued to outperform other assets. At one point, Bitcoin was outperforming the Nasdaq by 300% and the Standard & Poor's 500 by over 1,600%. Despite the unique challenges of the pandemic, Bitcoin has displayed its status as a capital-preserving asset which can act as a hedge against financial uncertainty. This narrative is expected to continue as other Fortune 500 companies will follow the trend of Tesla and convert parts of their balance sheet to Bitcoin. Jack Dorsey suggested that Bitcoin had the potential to be the currency of the internet and could disrupt the way people transferred money, including cross-border payments. Retail companies are expected to sell products for Bitcoins, further widening the use case for Bitcoin. Institutional investing in Bitcoin is likely to have both short and long-term implications. In the short term, investments from Tesla and Square will encourage retail buying, further driving prices up. In the long term, companies are likely to follow the pioneers and invest in Bitcoin. Bitcoin has a maximum supply of 21 million coins, more than 18.5 million have been mined. With only 2.5 million coins left to mine and more institutions looking to show interest, this will likely create a supply crunch, resulting in the price going up. A landmark judgment was approved for the Bitcoin ETF when the Ontario Securities Commission decided to approve Purpose Investments Incorporated's application. In just 2 days, the ETF had collected over $421 million in funds, beating all expectations. The ETF is on track to be one of Canada's biggest. While parts of the world are legalizing cryptocurrency EFTs, the SEC in the US has taken a hard stance against it. Previously, both Gemini and Van Eck have attempted to bring regulated ETFs, but have not received approval. But with President Joe Biden taking office and the appointment of Gary Gensler as the SEC chair, things are likely to change soon. ETFs are likely to bring droves of institutional investors into the cryptocurrency markets to diversify the portfolio while minimizing the downside risk. ETFs also provide a lower-cost approach to investing in cryptocurrencies, are open 24 hours a day, and maintain high liquidity. These factors are likely to attract institutional investors and will attract more money into Bitcoin. While institutional investors initially mocked Bitcoin, it is a phenomenon which can be hard to ignore. Bitcoin has had a remarkable year where it has continued to outperform stocks, real estate, and gold. Institutional investors have taken notice and are changing their stance on Bitcoin. With institutions lining up in droves to get a piece of the market, this has only made it more desirable for retail investors. The current interest shown by companies like Tesla and Square is expected to have long-term implications for Bitcoin. More importantly, perhaps, cryptocurrency ETFs are likely to be a reality soon and could be a major factor for the broader adoption of Bitcoin. The future of Bitcoin is bright, with plenty of interest on the horizon and the demand continuing to rise. With that being said, what do you think about institutional investors taking a dip into Bitcoin? Which institutional investor do you expect to invest in Bitcoin next? Feel free to share your thoughts in the comments section. Thank you for watching the video, and please consider subscribing to the channel.